Hello, everybody. Welcome to Tip Tuesday, where we talk to industry professionals about what they've got going on and about the need to know information in their field today. So today we have got our insurance expert specialist guru, Mr. Cal Hamden. He
Hi, everyone.
knows a thing or two about insurance. And one of the things that we've been getting asked questions about nonstop since the start of the year has been a very specific subsection of insurance, which is condo insurance. So we're actually going to talk about condo insurance today because there's a lot of questions flying around and it's a hot topic. So Cal, let's get into it. Maybe
Sure.
Let's start at a high level and then get specific. So what's kind of going on with condo insurance these days?
As a whole, it's a combination of availability of markets, and then as everyone kind of thinks, well, where are these rate increases and a lot of declines in coverage and increase in deductibles are happening, and a lot of that has to do with the markets as a whole. A lot of them don't really want to be in that section of business right now because they think it's not profitable. So that's kind of what's created the predicaments that a lot of people are in. And then when you look at, some of the big disasters that have happened, like your Fort McMurray's and stuff like that, they've played a pretty big key part in that as well, in projecting it forward.
So when you're saying people don't really want to invest in condo insurance right now, how does that work? Who's investing in condo insurance?
Well, the insurers themselves, right, are basically saying that it's not a class of business that makes them money. So they're either choosing not to write it anymore, or they're restricting coverage or increasing deductibles. And that's why you're starting to see these condo board deductibles getting up to 50K, 100K plus of that. And that's kind of where it's coming from.
Got it. So if to summarize it, any business is in business to be profitable. And the cost of condo insurance traditionally hasn't been high enough for it to be profitable for these insurance companies. So they're attacking it from two angles. They're either decreasing the service level by decreasing the coverage, or they are increasing the premium to make it profitable. So
exactly, yeah.
For someone who owns a condo, what are some of the noteworthy, let's start with the premium. Like what are some premium increases, or what kind of spectrum of premium increases are we seeing in the condo world?
On the unit owner side, it's not as bad. Like we're talking just the unit owner themselves. You're still going to be in a pretty affordable range, but the condo board themselves or the owner of the building, like 200% to 300%.
200% to 300%. Holy smokes!
Yeah.
Okay, let's quantify that a little. That's a lot. Holy mackerel! Yeah. All right, so let's say that. Let's use an Edmonton example here. So I've got myself, a pretty typical downtown high-rise condo. Kind of, if you look at the background, the view from the condo in that picture, it's a pretty typical condo. So we're talking, $450,000, $500,000, 2-bed, 2-bath, 1,000-square-foot condo in a decent building. Like, what would have been the before premium? What are we coming up to after?
So like the unit owner themselves, like if you own the units themselves, the premium's pretty much unchanged. But where you're seeing the increase is actually in your condo fees, because the condo board policy has now went up 200% to 300%. So I have an example. I can give you one.
Please do.
There's a building downtown, and they put in a couple of claims. They were small, like 20,000, 25,000, 30,000, and they were paying 3 years ago. They were paying 96 grand, and it went to 450,000.
To insure that's just like the common property, right?
Yeah. So and it's a pretty big building. It's a 300-unit building, but that kind of paints a picture. The cost of that insurance and everything else needs to be split amongst every unit owner. So that's where you're hearing about these condo fees that are $600. Some are even $1,000 a month.
Right. So condo fees are jumping because of the cost of this insurance.
Exactly. Yeah. And that's kind of where it's coming from. So they're a sore subject right now, to say the least.
It sounds like it. Yeah. So and we're attacking it from the other angle. So what did coverage look like before, and what does coverage look like now?
Before, you used to see, lower deductibles, like 5,000. Some of them were even, we've seen some policies that were still 1,000. Now they're going minimum 25 grand to 50 grand. The premium is like at a minimum 200% higher than it was 2 years ago. So that's kind of where, if you're even And the problem is that everyone's kind of getting lumped into these rate increases. So an example is, even if you're a condo board that owns just a fourplex, you're still seeing those increases. Like I have one, for example, that's it's only went up 100%, but it's a newer building. They've had no claims, but still it's it's doubled in 2 years.
Wow.
So it kind of paints a picture, and it's just a fourplex. This isn't like a 100 unit, 200 unit building. This is just a simple fourplex. So it's kind of it's spreading across the whole industry. They're basically saying that, before the advantage of owning a condo was that your insurance was lower as a unit owner. Yeah. But now they're starting to say that the claims aren't justifying the premium they're collecting. So they're coming in close. So soon, and we talk about this in our office every day, to insure a condo will cost you as much as insuring a house soon.
Wow.
Yeah.
Wow. Okay. So, I mean, if that's, and let's actually, you said something interesting there, because one of the cool things that can happen in Edmonton is if you want to do a small infill development, like side-by-side duplex or a fourplex or a triplex, oftentimes in Edmonton, we see that condo titled because often it's easier to get a development permit for that.
Yeah.
Now, I mean, we'll talk. I'm just like not ready to keep talking about how high the premiums have gotten. So we'll come back to that, because it's killing me. I mean, I have a couple of condos. Yeah, I mean, it's it really makes you have to change up. It really makes you have to change up your business plan when that expense line goes up.
Yeah.
Because I mean, it was tough cash flowing condos before as an investment. Now it's even tougher. And they
used to be super cheap to insure. And the funny thing is that what we've seen a lot of is people weren't even insuring their unit. And so like with the regulation that they put in, they made it mandatory that you have to do that now.
Right.
So like you'd have owners of like 15 rented condos, and none of them were insured, and now they're calling you urgently being like, I need this right now. Because that regulation came in when they changed it was within the last 18 months is when they brought it in. Everyone that owns a condo probably received a letter from their condo board at that time. Right. Basically stating that you need to have insurance for the deductible and all that kind of stuff.
Right. So just to make sure everybody who's following along kind of is picking up what we're putting down here. So there's the insurance, number one, that the condo board gets to insure the common property. So when you own a condo, you own a share of the parking lot and a share of the hallways and the elevators and all that stuff. But
exactly.
Now condos are making it mandatory that you have to have insurance for the inside of your unit. Is that what I'm hearing you say?
That's correct. Yeah. And the reason for that is because it's all about subrogation. So subrogation is the ability to sue back and collect damages. So if it originates in a unit owner's unit, let's just say, they need to have the availability to go to XYZ insurance company to collect some of their money back. And that's kind of the purpose. Is before everyone was under the interpretation, well, the condo board's insuring the building. But yeah, they are. But also you're responsible for the liability within your own building, which that's what they weren't insuring. So it
makes sense. Yeah. So basically, like, before, if you turned on a bath and just kind of forgot or whatever and flooded everybody out, it's like, okay, that's all in the condo, and the deductible comes out of the reserve fund kind of thing. Now, I mean, condos are kind of getting wise to the fact that, well, you kind of created that problem. So as an owner, you have to have insurance to cover the building's deductible if you create a situation.
Exactly. And it's even more important and I'm sure there's a lot of people that own rented condos in here that are viewing, and for the people that do, you have to have your tenant has to be carrying insurance too. It's all about passing that buck to the responsible party, right?
Right. So yeah, I mean, whoever does the deed, as it
were,
has insurance to cover the fact that they were the one that did the deed. So that's a really good tip. Is like, as an owner, you always want your tenant to have tenant insurance. So when we talk to our investor clients, whether it's a condo or a house, like, tenant insurance is pretty important, because I mean, a lot of tenants don't have the money to cover your deductible, whereas if they have tenant insurance, that's what it's really important for.
And it should almost be treated as mandatory now, because the vast majority of the markets won't even insure your rental without it anymore. So that you may as well treat it that way, like, regardless of what it is. Even if your insurance company tells you it's not, you may as well do it, because it's probably coming down the line anyways, right?
So would there be a situation then where there was a problem at the property caused by the tenant, and because the tenant didn't have tenant insurance, your own insurance policy would be voided somehow?
No, I mean, it would be pretty rare. It's just what'll end up
Okay, good.
happening.
That would be
Yeah, I
intense.
guess it depends on the circumstances. Like, I'm not an adjuster, but it depends on the circumstances of it. It's usually pretty circumstantial, but the likelihood is no. It's pretty unlikely. But it more comes down to, like, let's say you have a bad run and you don't have any insurance, so it's going on your policy as the owner. Let's say the unit owner or the building owner. What happens if you have 2 or 3 in a year and you can't get insurance now?
Right.
So like if you have a bad run and you have a bad year and your tenant doesn't have insurance, it's all your responsibility as the owner. So it kind of passes up to the chain. So the tenant doesn't have insurance, well, it goes to the unit owner now, or the building owner, and it kind of just works its way back, right?
Jeez Louise.
And it can be problematic. I mean, claims is not something to go home about. Basically, if you have 2 right now, and if they're of the same type, so an example would be 2 water damage claims, you're not getting water coverage, period.
Wow. So
that's kind of where it's at right now. Yeah.
Wow. So I mean, I don't know if there is an easy answer to this question, but
Sure.
What do we do other than just pay the higher premiums? Like, are there any tips to mitigate this situation, or any, like, even upgrades or improvements that as owners we can do to our condo units? Or, you said make sure your tenants have tenants. Like, are there solutions here, or is this kind of just a situation where it's like the solution is budget better and make sure that there's room for that expense line?
Since we're talking about condos specifically, I'm just going to focus on that. So like, if I'm looking at it strictly from like an insurance standpoint of what I'm purchasing, okay? If I'm looking at it from that point of view, I'm looking at obviously something that's newer, more than likely. Like I would prefer to buy a unit in a newer building because we know the updates are done to it. You're not going to have a problem with electrical or plumbing, more than likely.
Right.
I'm not going to say that it's not an impossible thing to happen, but it's less likely. Or if you're going to buy into a used building, you buy one that's been renovated fully. That would be the ideal scenario, where they've done all the upgrades, they've replaced the plumbing, they've replaced the electrical, because you're not thinking about just yourself. Let's say you're on the 3rd floor and there's 10 floors above you. What happens if the plumbing goes on the 10 floors above you? You're going to be impacted as well. Water's going to go down. So it's just kind of the way it works. That's my point of view, and that's the way. If I was buying I'll be honest, I'm not buying a condo if I'm buying something right now. I'm just being specific because they're just so expensive to insure. And there's a lot of negligence there. Like when you referred to the stuff with the bathtub, like that happens a lot. So, and you got to remember that it could happen on the 7th or 8th floor, and all the floors below him are getting damaged. So condos are in a dark place, and I'm not trying to sound grim or anything like that, but it is good for you guys to know kind of what's going on with them for sure.
Yeah. So it sounds like the way to mitigate the risk, for our investor clients is like, be extra cautious about your tenant insurance. And if you're an owner, make sure that you've got your own internal policy that covers you off, because
exactly
that's the kind of thing that can happen. No, I mean, okay, so I'm going to go back to a question I was going to ask is, we've got these duplex, 4plex, triplex units in Edmonton, and some of them are condo titled. And one of the things that we've run into a couple of times is it's a little wonky to insure them, because it's like, is it a single family duplex? Is it a condo? What is this thing? How are we counting it? So can you talk to me a little bit about insuring those kind of unique condos that look like residential property but are actually condo property?
I'll be completely honest, I haven't really had a problem insuring them. Like, to be specific, like it more just kind of comes down to the structure. Like if you have a condo board, they own the duplex, 3plex, or 4plex, whatever it is. We just treat it as a multifamily building. There isn't any more units than what it is. For example, there's one that I did the other day. It's a 3plex, but it's all suited, so it's technically 6 units, and they're selling it as 3 condos. It's kind of hard to explain. So because it's only three condos technically, but they're suited. So it's almost like you're doing three condo policies for the condo owners, but then they have a rental below them. So it's kind of a little bit confusing.
Yeah, it's a bit of an interesting one, but
But
I mean, the
we haven't
takeaway
had
is
any
like
problems.
it's doable, right? Like it's
Oh
not
yeah,
like
totally. It's going to be expensive. It's it's the premium's going to be high.
well.
It does.
If there's one thing I like about this conversation, Cal, is that you're just telling it like it is. You know?
Well, I could show it to you, and you'll know exactly what I mean if I quote one. So there's no reason for me to kind of tell you anything otherwise. I mean, it just depends on the market too. Like for the threeplexes and the fourplexes, there's a little bit more availability in markets, just because the value of them isn't so high. But when you start getting into like 10 million, $100 million buildings, they become super complex to insure because you have to fill the line with multiple insurers. So it's not just one insurance company going on. You might have 10 or 12, sometimes 15, and they're all taking a piece of it because they don't want the whole thing. And that's kind of where the complexities of the rate increases are coming from, because you've got 15 companies deciding, well, I want an extra 200%, I want 300%, I want 400%. And it's all on a piece of that, right? And they've all got different rules and minimum deductibles that they want. So it becomes super complex in that aspect.
Makes sense. Yeah. Well, gosh, what a story. What a story, man. What a story. Well, is this going to be the kind of thing where it's kind of like an underfunded condo reserve fund, where we're going to see a whole bunch of increases that's going to fill the coffers back up and it'll stabilize? Or are you thinking this is going to be a pretty steep escalation for a while? Like, have we ripped off the Band-Aid? Are the prices now what they are, or is it looking like this is going to keep going?
We were just talking about this internally, like me and the owner and some of the other brokers in here. We were just talking about it actually just the other day. And what ends up happening is that eventually they'll make so much money that they're going to get super competitive again. Well, how long that takes, I honestly think we're going to be, from what we've talked about internally, about another 1.5 to 2 years of this at least. And if it doesn't here's the thing though, it's kind of a catch-22. Say another disaster happens, well, it's not coming sooner. It'll kind of keep going the way it's going right now. The problem is, and this is what we've been talking about with me and a bunch of our other clients, is that if you look historically what's been going on in Alberta, we haven't had a break from a disaster, period, per year since 16. So when you're looking at it and you're wondering what's going on, I mean, they've paid out like 10 billion since 2016 on property claims in Alberta. This isn't Canada.
Yeah, so they got to just fill that. They got to fill the reserve back up. So if I'm hearing you correctly, like this sucks in the short term, but what's going to happen is they're going to charge a whole lot of money. They're going to fill up those reserves, and then once they're in a cash comfortable position, they're going to start, using price as a lever to earn that business, and then
exactly. They're going to find. Sorry to cut you. They're going to find something like the minimum deductibles. I don't think will change. And what they're trying to do with that is they're trying to change the mentality as a condo building owner to not put claims in for those amounts. Right. Like if you've got a building that's worth 300 million and you're putting a claim in for 20 to 50 grand, I mean, there's a different conversation that needs to be had because your premium is substantial.
Right.
So you're going to end up paying that back, is I guess what I'm trying to say. And that's what they're trying to do. They're trying to provide corrective action through premium and minimum deductibles to change our behavior as owners.
Got it.
And so once that happens, you're not going to be putting a claim in for $5,000 to $10,000. And so these problems will kind of disappear. Yeah.
Makes sense. Makes sense.
Yeah.
Well, geez, man, that's for a Tip Tuesday. I got a heck of a lot more than I bargained for. That was a great conversation. And for everybody watching, I mean, we not only talked. It's a hot topic, but we got into like the macroeconomics of how insurance premium prices ebb and flow, which is fascinating stuff. So, Cal, I mean, thanks for tuning in. For everybody watching who's saying, gosh darn it, or other expletives about your condo going up.
I'm sorry. I'm sorry. I apologize.
I appreciate you telling it like it is. And, it's good awareness. Like if there isn't a silver bullet, then you have to just be smart and budget for it and plan for it, which in and of itself is a really great takeaway. So Cal, I thank you for that.
Yeah.
And we'll catch you again soon, my man.
Okay. Thank you. Have a good day.